Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the last Monday of a full week. No, we still have one Monday left in June. That's going to be next week. But yeah, a Monday of a full week. Look, we have an interesting period that we're going through. Of course, everybody understands that, geopolitics are on the rise. But let's not forget, and I keep on saying this, let's not forget about the economic data. And that is quite important in my opinion. Look, about all this and a little bit more in the video. By the way, if you haven't figured it out, this is just the video preview for the webinar, which is going to happen in a few moments. So stay tuned, and hopefully you're not going to be disappointed. Yeah, feel free to ask questions. Hey, if you're joining in live, if you're watching this as recorded, don't forget to leave your comments below. Thank you very much, and I'll see you in a bit. Alright, okay, ladies and gentlemen, hello and good morning. Long time no see, no speak, no anything. Basically, ladies and gentlemen, I hope you all had a fantastic weekend. I hope everybody's feeling nice and refreshed. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday. Today's Monday, the let's have a look. The 23rd of June, 2025. Still, so yes, it's a beautiful Monday for, well, I hope so for a lot of people, but not for everybody probably. Anyway, look, we're going to talk markets. We're going to talk about a little bit of geopolitics, but mainly markets, because again, let's not forget that the economy is still the driving force of everything. So look, before we jump into anything like that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. What I'm going to do is I'm going to put my usual good morning in the chat room here. Good morning, everyone. So that I'll kick the ball here. So maybe somebody else will also write to me good morning. Look, okay. Look. Also, before we jump into the charts, as always, let's quickly have a mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, Nikkei225. Now look, of course, as we all know, what happened during the weekend, the US decided to fly in a few bombers, although on Friday the rhetoric was that we need 2 weeks for that. But anyway, maybe that was a little something just to kind of not to spook the markets too much. And now that's what we saw. Okay, well, we'll just have to kind of live with it. But what can I say? For now, the markets seem to be resilient, because the market seems to be seeing this as not a full out war conflict between the US and Iran, but more of a flexing muscle thing. So okay, we saw countries flexing muscles for a while now. I mean, we haven't been born we're not born like yesterday, but the market right now is more curious on what's going to happen economically. So I think that this is what we need to focus on right now. We need to still keep an eye on the economic data. Last week we had loads of central banks coming out with their interest rate decisions. And this week, it's a little bit more on the quiet side, I would say, but still very important to keep an eye on, because again, we're slowly getting into July. Where's that? July 6th, July 9th. Sorry, July 9th. Is it July 9th or is it July 6th? Oh, I keep on forgetting. Anyway, so we're getting closer to the removal of the 90-day period. So I totally forgot, honestly, through the weekend, because there's so many dates to remember all the time. So this pause that we're getting closer to the end of the pause for the this 90-day pause that we had on tariffs, basically on the US tariffs on the world. So look, doesn't matter, 6th or 9th, either way, the market will be very cautious next week. because again, it's going to be, yeah, it's going to be very interesting to see if some sort of a deal could be reached, because at the moment nobody's even talking about that. Everybody kind of shifted away from the potential deal, and now everybody's like more focused on geopolitics. So, which in my opinion is not a very good sign for the market. But anyway, look, for now the stock markets is seeing pushing higher. We're seeing a reversal here, although we gapped to the downside. Look at this, we filled the gap, we're pushing higher, and the question is on Nikkei here, are we going to go and end up testing my downside line, which I keep on talking about? This downside line is taken from the highest point of July of 2024. So yep, we're approaching this line kind of a year, well, not almost for a year we have been forming this downside line, because we're going to be jumping into July soon, and this is what I will be keeping a close eye on. I'm going to keep an eye on this downside line if we do pop above the 38,770 zone, somewhere around there, and then we'll take it from there. For the downside, very straightforward. The drop below the EMAs here is required. If I can get that move, amazing. I'll consider some lower areas. In terms of economic data, ladies and gentlemen, I think I should have started maybe with the economic data instead, just to kind of go through this. So look, this morning, Jibun Bank composite PMI, composite manufacturing and services PMI, the flash ones came out, and those were somewhat on the better side. Look at this, the manufacturing PMI managed to jump back into expansion territory. Well, at least that's the flash right now. That's the estimate. We'll see how the actual number comes out, but if it stays like this, then yeah, that's great. That's a little bit more reassurance for the Japanese market, that, you know, not everything is that gloomy, because we know that, let's say, the Japanese yen was, what I'm saying was, because I'll jump into Forex in a while, Japanese yen was kind of on the stronger side, and this was an issue for the well, sorry, it wasn't actually an issue for the BOJ, but now it could be the issue for the BOJ, but like I said, I'll talk about that. Yeah, like, look, I think everybody was worried about that, you know, Japan might not reach an agreement with the US and everything's going to be a little bit more expensive. I think that the market needs to understand that times are changing, and you have to kind of adjust. Now, if you adjust, then that means that you're accepting the fact that there could be higher inflation in the upcoming months, right? Okay, nobody wants that, but I think that this is kind of a little bit inevitable. Look, in terms of other Japanese data, Tuesday, nothing much. We have on Wednesday the BOJ Tamura speaking. BOJ Japanese bond purchases are going to be coming out here as well. Nothing major here on Thursday, ladies and gentlemen. Nothing here. Okay, some bond purchases again. 3-month bill auction. Okay, so this is something that we're going to be keeping a very close eye on. It's going to be quite an interesting moment. If we do see this one kind of rising a little bit, then maybe not everything is that good in the economy. However, we'll see. For now, let's focus on what's happening on the geopolitical front as well. Also, with Nikkei, given the absence of major, maybe economic data, I think that they're going to be subject to what's happening in the global arena. So that means for the Nikkei225, we need to kind of keep an eye on geopolitics and in general what other indices are doing. Let's jump into China very quickly. China, it's stuck. Look, I mean, I'm not going to say anything else here. We're stuck. We're oscillating around the 50-day EMA. The 100-day EMA is providing fantastic support. I said to you that I need to see a drop of that. I need to see a drop below that, and I need to see the body of the daily candle staying below the 100-day EMA and the this 13,000 kind of 288 zone. If we can get that move, my next target is the 200-day EMA. For the upside, a push up of the 13,555 territory here would be nice, would be great, and my next target would be the 13,800 zone, and this is a good area of resistance. But look, for now we are stuck here, and can't really say anything else apart from we're watching. In terms of economic data from China, now, last week we had the PBOC, the People's Bank of China, coming out with their interest rate decision. Not much has changed in there. There are not much action, but they remain the same with the interest rates. There is a National People's Congress happening. When is that? Monday? No, sorry, not Monday. Tuesday and Wednesday, and is that, yes, Thursday, and let's have a look. Is it Friday? Yep, still Friday. So ongoing. So look, industrial profits year to date are coming out on Friday, so we'll keep an eye on those, but nothing, like I said, nothing really major coming out from China. I think that economic data is important, but I think for China, I think that they will be also watching geopolitics very carefully and how China will respond to if there is, let's say, a block of the Strait of Hormuz. And that's where I think maybe China could step in a little bit, because let's face it, like China is one of the top buyers of oil, of Iranian oil, and they cannot really, they don't want to really afford to have more expensive oil, because again, in addition to the tariffs, yeah, that's a big bummer. If I can, if I can express myself this way. Anyway, let's jump into the U.S. indices. So very quickly, I'll just quickly go through the technicals right now, but let me pick up on the fundamentals as well on this one. So the FTSE the Dow Jones Industrial Average is currently still trading above all its EMAs on our daily chart, so it's a positive sign. However, as I said to you before, I need to see a pop above this 42,800 and kind of 50-ish zone, or maybe even better, the 42,900, or even much better, the 43,000, the psychological 43,000 territory. That's something that we are watching as well. If we get a nice pop above that, then great. I mean, I think that this could open the door towards that 44 territory. Look, previously also I said to you that I'm watching this as a as a nice little inverted head and shoulders pattern, especially on the weekly chart, and I need to see that move above the neckline, the so-called neckline, which is, like I said, let's roughly say that it's around the 43,000 zone. And then yes, we'll go from there. But the moment everything seems to be still positive, we're on the weekly chart here, you can see that we're still above the 50-day EMA on the weekly chart. So yep, we could see still some nice action to the upside. However, if it starts falling below the 50-day EMA, and let's say on the daily chart, if it falls below, if it starts falling below the 200-day EMA, yes, I'm going to lean towards the downside. S&P 500 is also resting nicely at the 5,922 territory. If we remain above that area, yep, I'm still leaning towards the upside, especially if it pops above the 6,069 territory, somewhere around here. For the downside, I need to see a drop. I need to see a drop below this territory right here, below this 5,922. If we can get that move, amazing. I'll go lower. The S&P. Why do I keep on saying this? The NASDAQ 100, also beautiful hold up. This 21,445 area is providing fantastic support, as you can see yourselves. It is holding up nicely. So hey, I will remain somewhat positive as long as we stay above this territory. If we push above the 22,071 territory, hey, we're not really far from the all-time high and might as well actually end up testing it. But we're closer now to this key area of support. Let's see if it holds. And another thing, if it does retrace below this 21,445 zone, of course, then the question is where the next area is. Well, this is where I'm going to apply my beloved Fibonacci level here, from the lowest point of April to the highest point of the current highest point of June, I have to say. If we do fall below this, then hey, look, the 23.6 is beautifully sitting near my 100-day EMA, and then we'll take it from there. And then we'll see what's going to happen next. Long story short, I'm looking at this, like I said, and I'm waiting for the next big thing. The next big thing here in terms of economic data. Look, Monday, today, existing home sales, S&P PMIs, the composite manufacturing services, the estimates again are coming out. So we'll keep a close eye on those. At the moment, the forecasts are a little bit on the lower side. Let's see if that's going to be the case. Then we're keeping an eye on Tuesday. We have the house price index here coming out. Yep. We do also have the important CV consumer confidence number. So that's going to be quite interesting because look, the forecast is for the number to go back closer to the 100 zone, and let's see if that's going to be the case or not. We have the Fed Chair Powell testimony. That's important, very important, I would say. And we'll have to go and see how other Fed officials are, what are they saying, and if the market actually does have a nice retracement to that. Now, also we have the BOG summary of opinions, but that's of course something for Japan to keep an eye on. Then going into Wednesday, we have the continuous Fed Chair Powell testimony. Yep. And then we have also new home sales here, EIA crude oil stock change. Now that's going to be quite an interesting number because given that everything is right now circulating around oil, then the crude oil stock change here, let's have a look. Now, stock change, blah, 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 distillate, yes, so this one. Basically, the number has been on a lower side. So the stock, last time this came out, it was on the lower side, and the price of, we're seeing the price of oil, we're seeing that the numbers are pushing higher, and you can see the actual figure came out at minus 11.47 million barrels per barrels per kind of how many barrels are held in the stockpile. Look, any improvement, any better number than the minus 11.47, I think that could be a bit of a helpful hand for the bears of oil, but again, let's say depends on what kind of headlines will we be getting from the Middle East. Now, jumping into further action on Thursday in the U.S., we have a bit of data here, initial and continuous jobless claims. Of course, that's something that's going to be kept an eye on. GDP growth rate, the final one, that's what we're going to be getting from the U.S. So that's going to be quite interesting. At the moment, the forecast is for a very bad number, which is jumping into negative territory. The Q-on-Q final index is expected to come out a little bit on the higher side, but I'm watching very carefully the growth rate Q-on-Q from the final one. We'll see how that plays out. And what else do we have? Pending home sales. Again, a lot of housing numbers. Yes. So basically, you can understand like what's happening with the housing market in general, what to expect, and I think that there could be some slowing moments unless people are going to be rushing very quickly to go into those mortgages, because again, if everybody expects interest rates to go higher because of last week's Fed interest rate decision, and the way we heard that how the Fed reiterated its interest rate projections, that's something that, like I said, that could be for the market to consider, because again, we could see some increased demand just because, like I said, people would be fearful that interest rates would go higher again. Let's keep an eye on that one, of course. We'll see how it plays out. But also, by the way, I forgot to mention, ladies and gentlemen, join me on the 26th of June. That's 6 o'clock GMT plus 3. So 13 GMT time. Look, I will be running a webinar in terms of exploring sector dynamics in turbulent markets. We'll talk about different sectors which can which could perform great, which maybe could the other ones could suffer. So we'll talk about all that, ladies and gentlemen. Like I said, join. You can find the link in the description of this video, and we can go from there. Coming back to the situation here. By the way, the most important economic data set Friday, the PCE, the Fed's beloved inflation metric. Now look, if the current expectation is for a higher number, and where's the core? The core one is also expected to come out a little bit on the higher side. So basically, we are hoping to see, or not hoping, but we're expecting to see higher numbers, a little bit higher numbers, not much, but if that's the case, if it comes out on the higher side, then of course this is not something that the White House would like to see. I'm sorry. This is not what the White House would like to see, because again, they are asking for lower rates. The Fed is staying strong. They're saying, you know, we're not really going to do that because again, we believe that there's going to be, it could be higher inflation because of tariffs, because of the increased tensions in the Middle East and everything. So, you know, and I think that that's logical. I think that that makes sense. But again, you know, the White House wants what it wants, and it seems like sometimes nobody can stop that. But anyway, look, for now, long story short, we're keeping an eye on the PCEs on Friday. That's going to be one of the more important data sets this week. So let's, like I said, let's all be very careful, cautious, and approach the markets with, you know, with a cool head. Look, with the indices, just exactly what I said. I'm still somewhat positive on the indices, but I need some confirmation breaks. Yep, right here, and yep, for this one right there, in order to get comfortable with some higher levels. Dollar index, right. Okay, is this the beginning of a change of a trend? Let's see, because if the tensions continue to escalate in the Middle East, yep, we could see in a way dollar picking up interest, because again, this right now the dollar is kind of is finally acting as a safe haven. You know, before it kind of lost its status, now it seems like it woke up and it's like, oh, I do have a safe haven status. There we go. Let's go. So you know, we're seeing exactly that. I think that for now we should not rush, although the technical setup looks quite positive, at least in the near term. For now, I would say just let's not rush. Let's keep an eye on this. Let's see how this is going to play out. Let's see what kind of a response will Iran make. But for now, it's it's an interesting moment technically. From the technical perspective, it looks a little bit more positive, because we're kind of flirting now with this downside line taken from the highest point of February. But if it starts falling below the 97.5 zone, somewhere there, then yes, I will consider a move lower. I need to see a clearance of this highlighted zone in order to consider lower areas. The German index DAX, and yes, it is pushing. It is pushing nicely back to the upside here. The market is open, and we are testing the 50-day EMA. We're testing this 23,287 zone-ish. So yep, if we do pop and stay above it, then yes, I'll go further to the upside. For the downside, a drop below the 23.6 here is required in order to go lower. The German index, the UK index, which is the FTSE 100, ladies and gentlemen, beautiful rebound, came very close to test the 100-day EMA. I talked about this last week, and in one of my analysis, I said that if we do stay somewhere above the 50-day EMA, I'm still somewhat positive. And so far, it seems to be, you know, we seem to be on the right track. If we do pop back above the 8,811 zone right there, then yes, great, more buyers could join in. In terms of other asset classes like the Forex world, ladies and gentlemen, let me just jump into that one very quickly. By the way, in terms of UK, I forgot to talk about UK. In terms of UK data, we have also the flash composite manufacturing and services PMI figures coming out on today, so keep your eyes on those. We have some central bank official speeches, and something to keep in mind as well. Wednesday we do have, what do we have? 15-year Treasury gilt auction, okay. Then Thursday, nothing major. Again, some speeches here and there. Keep your eyes on that, because again, the market could, you know, pick up. You will probably not know, you will probably just see the headline, but just kind of be prepared to see maybe some sort of like a shock from somewhere, just coming out of nowhere, and then you will see the headline surrounding it, like, oh, it's because this, this official bank official said this and that, and that's why the market reacted. Again, been there, done that. We've been there, saw that. Anyway, coming back to the situation with the market here. Now, this is very, very interesting. I think the Forex world is amazing this week, and I think this week it'll be very amazing. Look at this. Look at this. We had a drop. We had a drop lower. We had a move. Now we're forming something of a doji, like a very clear doji here. We did fall lower. Last week I talked about this rising kind of wedge situation here, and it is. It worked out as according to the textbooks in a way when you were looking at the rising wedges. However, previously what I said, that we look at the prevailing trend as well, because the prevailing trend was to the upside, and maybe there was a chance for this one to push higher. Look, for now, I will say it this way, that if we are looking for some higher levels, I think that we need to take a very careful and cautious approach. And I think that what I'm going to do right now is I'm going to keep an eye on this 0.6455 territory right there. If we do push above it, I'll go towards the upper side of the rising wedge. For the downside, I would prefer to wait for a drop, and I would love to see the body of the daily candle here staying below all my EMAs, and then getting comfortable with the downside. In general, the fact that we're staying still below the lower side of the rising wedge, that's great. If we do remain below this, like I said, below the lower side, that's wonderful, and then we'll go from there. AUDJPY, my risk on, risk off monitor. That's why I have my the name of the webinar today is kind of starting the week with the risk off or risk on. And this is, like I said, this is where it's a little bit unclear, what's happening in general, because we are. It seems like everything should be bad, right? Because there could be potential escalation of the war and everything like that. But I think, as I said to you in the beginning of this video, that the market is, yes, it's worried, of course, but it's not something that the market has not seen before, like this flexing of power, and that's why I think the market is waiting for economic data. It was waiting for something a little bit more, something that has more weight, in my opinion. Don't get me wrong, the geopolitics do have weight, of course, but economic indicators, of course, like those remain important. AUDJPY, yes, seems to be like a potential idea for the upside here. Let's see if we can end up traveling higher, but for that I need to see a push above the 200-day EMA and the 95.74 territory right there, and then we'll go from there. NZD-USD, drifting nicely to the downside, breaking this upside line. So far so good. Yes, the market is not really feeling the love. NZD is not the strongest one right now, so although AUD-USD is somewhat trying to battle it out, NZD is kind of giving up a little bit, and we're seeing a further push south. That's why you'll see AUD and ZD popping nicely, beautifully to the upside here, and it seems like there could be some more upside for this pair. USDJPY. We remain above the 100-day EMA. We remain above that area. We popped above the 146.28 zone. I talked a lot about this, and basically it's kind of working out. So look, what I said previously, and I'll stick to my words, that if we stay below the downside line taken from the highest point of January of this year, or in general the current highest point of this year, if we stay below this, then yeah, we could see another move to the downside. But things happened, and the US dollar index strengthened, and that's why we saw this rallying. Also, the market is kind of, like I said, it's not really like a risk off, although you would think that it should be a risk off environment, but the market seems to be shrugging that off, and like totally jumping into risk on. And look, for now, at least for now, until the U.S. session opened up, I think that what could happen, I think we could see some statements coming out from the U.S. Maybe some threatening statements, and that's where maybe the market could get a little bit fearful. But at the moment, yep, USDJPY is pushing higher, mainly on the fact that the US dollar is getting stronger. However, the Japanese yen is also on the weaker side a little bit because, again, like I said, the market is not really, the market participants are not really seeing that risk off as probably everybody was hoping to see. On the contrary, everybody's more leading towards a risk on environment where people will be buying equities, and that means that we'll need less of safe havens, something like Japanese yen. Let's see how far this can travel. Is it going to be only a move towards this area somewhere, this 200-day EMA or the 148.45, or actually we're going to go a little bit more to the upside? USD CAD is pushing higher as well, but although you would say oil should be oil is picking up and you should see some strength in the Canadian dollar. Probably not against the US dollar, and that's why you need to kind of see what you're trading in a way, because if you're trading the US dollar and you're trying to expect some weakness in the US dollar, then I would say not at the moment. Not at the moment. I think that there could be some more action, if you're trying to sell the Canadian dollar against another currency, then we'll look into other currencies in a bit. USDCHF, just have a look at what's happening here. It climbed back above the 0.8156 territory. That's great. And in a way, we're staying above that. So I would say, yes, maybe we could see a little bit of a move to the upside. But hey, I'm not going to rush into anything here right now. For now, I'm just observing the price action. I'm keeping an eye on this downside line. I'm keeping an eye on the 0.8038 zone right here. And then we'll take it from there. So these are the areas I need to see a break off in order to consider the next movement. Let's quickly jump into EURUSD, and then I'll jump into some other currencies. Now, look, with EURUSD, I talked about this one, and I said, look, I need to see this one trading within the rising channel in order to continue for me to kind of get comfortable with the upside, but also a push above the 1.1573 territory is required. The weekly chart, I'm also looking at that one, and yep. For now, I need to see the body of the weekly candle remaining above this barrier, above this 1.1573. I'm not really getting that. And I'm not really, that's why I'm not really getting comfortable with the upside. At this point, you should say, hey, but now should we examine the downside scenario? In a way, yes, but I needed to see it drop below the 1.1454. Did I get that? Not really. I'm just kind of, looking at this picture here right now. We're struggling. We dropped below the lower side of the rising channel, but we cannot really clear the hurdle here. So I need to see a clearance of this hurdle first in order to go high, in order to go lower. EUROJPY. So look, it's not that it's like I said, the Japanese yen is not really, feeling the love right now, and actually it's a very good indication that, the markets kind of, or market participants kind of were shocked in a way a little bit that the market did not react negatively to the U.S. attacks, and that's where, like I said, that's where you were seeing the Japanese yen getting sold off because nobody wants to be in the safe havens at the moment, because I have another theory, but again, it's not really backed by much. But in a way, maybe this is like a last dance before going into next week, when we'll be seeing that trade deal 90-day pause, or should I say Liberation Day 90-day pause thing happening, and it's going to be coming to an end. So that's where, like I said, that's where the market maybe believes that maybe we could see some negativity after that. So look, I said it before, July could be a negative month, and I'll probably stick to my words for now. EURUSD, yes, continues to push higher. We are kind of approaching a key area of resistance right here. Then the next target is here. But look, for now, let's not rush into things. For now, just aim for the 170 zone, the psychological 170 zone. I think that's a very important target. Let's see what's going to happen there. EUROCAD, I just wanted to quickly pick up on this one. You can see that the Canadian dollar is on the weaker side, so not a lot of people are buying the fact that oil is pushing higher, so maybe, you know, they're still somewhat on the bearish side. GBPUSD, let's jump into this one. Still stuck above the 50-day EMA here, so in a way that's a positive sign, so there could be some more buyers jumping in here. But for the downside, a drop below this upside line, below the 23.6 here is required. If we can get that move, amazing. More sellers here could join in. GBPCAD, just a quick glance. Yep, similar story. We're pushing back above all my actually, let me get rid of this upside line. We're pushing back above all my EMAs on my daily chart. CAD-JPY. Now, this is an interesting one. So this one is like it favors the oil market. The other favors the, you know, the risk-off market. Now, Canadian dollar is pushing higher a little bit because, yes, okay, oil remains elevated. We still, you know, keep this is a fact. However, in this case here, this could, you know, even if oil pushes a little bit to the downside, I would say, CAD-JPY could still drift higher if we do still see that, you know, equities being bought. And if equities remain, you know, if equities continue to be bought, then this is what, like I said, this is more of a risk-on environment, and people could be jumping into you know, more risky assets just before the tariff deadline runs out, and that's happening at the end of next week. So yeah, let's have a look at gold. Let's have a look at the commodity sector. Yes, gold remains a little bit volatile, but you know, the market also trying to understand why the hell gold is drifting lower. Like I said, US dollar, everybody jumped into US dollar. That's one thing, but maybe that will fade away. But the other thing, the market doesn't really, you know, it seems like they're not bothered. The market really thinks that I need some economic data. I need some, you know, clear economic data to be showing me that maybe these flash composite services and manufacturing PMIs will be that, you know, that trigger point from where we'll see that, oh, actually, you know what, the economy is not really doing good. So let's move lower, you know, and let's move lower. And the equities would move lower, but gold maybe could pick up buying interest. For now, I'm leaning towards the downside. I talked about this last week. I said to you that from the technical perspective, if we do drop below the 3,382 territory, I'll lean a little bit more towards the downside, towards the 50-day EMA, towards this upside support line taken from the lowest point of April of 2025, and then we'll go from there. For the upside, I need to see a clearance of the 3,430 zone, and then I'll see what we can do with the upside then. Maybe we'll go for that all-time high again. Silver. Stuck, found good support near the 35.45 zone, and I need to see a clearance of that in order to go lower. For the upside, I need to see a push at least above the 36.87 territory, and then we'll go from there. Now, our beloved oil, by the way, platinum, let's say pushing a little bit higher. Palladium pushing a little bit higher, platinum stuck a little bit, copper stuck, and nothing interesting. Now, oil, of course. So as you can see, we spiked higher this morning, and look at this, it was a beautiful move. We actually failed to reach the current highest point of June, near the 77.58 territory, and that's a little bit of a that spiked. This big spike we saw when Iran kind of retaliated against Israel's attacks, because you remember on the 12th, Israel attacked Iran, and then Iran retaliated with missiles back at Israel. So this is where the spike kind of happened. Initially, we were moving higher, yes, but first, like I said, it was Israel that launched rockets at Iran and kind of, you know, started the conflict. So for now, let's say what we can see here is that we are looking at some higher areas, but only if we do pop above the 77.58 territory. Now look, I mean, I talked about this previously. I said, look, I need to see the body of the daily candle remaining above this downside line, taken from the highest point of September of 2023. In a way, we can still keep this strategy in mind. But given the fact that we recently failed to cross above the current highest point of June, that's why this barrier becomes probably a more important one. Yes, the downside line is important as well, don't get me wrong, but now we're seeing a move back to it, a move back to the back to this downside line. Look, it's a little bit of a choppy session in my opinion. I mean, if I look at the 1 hour chart, you'll see that it initially spiked, now it's declining. So let's not rush into things. And I think in moments like these, I strongly recommend just to kind of observe the market and just wait to see what's going to happen next, and then we'll go from there. Now, look, if we do see a move back below this downside line, okay, that's going to be the first indication for me to maybe start considering lower levels. But I think that what I'm going to do here is I'm going to keep an eye on the 72.25 territory. If we do fall below it, I'm going to lean a little bit more towards the downside. Let's jump into natural gas. Natural gas also pushed initially to the upside, but now we're seeing a retracement. We saw now a retracement on, when was that, on Friday. We're seeing a continuous retracement, and but still we remain above this 3.83 territory. So as long as we stay above that, I'm going to continue targeting the upside. So if we do stay above this upside line, still we could continue targeting the upside. But if we start falling below the upside line, we start falling below the EMAs here, the 50 and the 100, well, I'm looking at some lower levels after that. Coffee, very quickly on coffee, continues to decline. Yep, the stronger dollar did not really help coffee here. Cocoa also on decline. Everything is, yes, getting pushed lower because, again, tensions and everything like that. Although you would think that maybe, this could, damage the supply and everything. Yes, it will, but we need to see that first. For now, we're seeing a stronger dollar, and that's why we're seeing a little bit of weakness in these futures and these soft commodities. So, similar story with wheat probably. There we go. Yes, and a little bit of a decline after a nice, beautiful move last week. Sugar is also still careful and cautious. By the way, from the technical perspective, we're still in the falling channel here. So, in a way, this could still drift a little bit more to the downside. And my favorite, cotton, retracing back down, but still somewhat elevated. So I would say this way, as long as we stay above the 50-day EMA, yep, I will continue targeting the upside. Now, ladies and gentlemen, for dessert, as always, let's jump into the Forex world, because that one, Forex, what am I? Crypto world, yes, well, could be Forex one day maybe, but I don't know. Bitcoin, BTCUSD, initially, sharp decline, boom, there we go, that happened during the weekend. Now we're seeing a recovery. We're now seeing a move back above the psychological 100 level. Look, I talked about this area right here, but look at this. Look how well the 100-day EMA. So that's why you always look at not only some levels or like support and resistance areas, but also keep an eye on the EMAs and vice versa, because you need to kind of look at all of them in a way, but just keep it simple in a way. Pick a few, pick a strategy in general, what works for you, and kind of follow it. If it works, then that's great. Look, for the upside on this one, I would say that at this point, if we do climb back above the 50-day EMA here, wherever it's going to be, I'm going to consider a move to the upside. Bitcoin Cash, beautiful decline initially, then now we're seeing a recovery, but is it gonna continue pushing back up, or actually are we seeing a little bit of a retracement back down towards this upside line? Let's not rush into things, and let's wait and see. For now, I am leaning a little bit maybe towards the downside, to be honest. I mean, I would love to see a test of this upside line and the test of this 50-day EMA. I would love to see a rebound from here, and that would be a great opportunity probably for the bulls. Ethereum is also retracing after a nice drop. Look, very simple. If we stay below the 2,326 territory right here somewhere, I'm going to continue targeting the downside. Ripple, we fell briefly below that psychological 2 zone. We fell below the 200-day EMA as well. But look at this, we're climbing back up right now. Again, keep your eyes on this 2.05 to 06 area. If we do push and stay above it, I will probably consider a little bit of a retracement back up. For the downside, a drop below the 200-day EMA is required, and if we can get a nice move below the below the 200-day EMA, shown as the white line here. If we stay below it, then yes, I'll continue targeting the downside. Litecoin, very quickly, Litecoin remains below the $81 mark here. I talked about this. This was my downside scenario. If we continue to trade below that, I'm leaning towards the downside. Very simple. Dogecoin, let's have a look at this one. Yes. Okay, Dogecoin is an interesting one. Now, if we know that Tesla launched quietly its robo-taxi thing in Austin, Texas. So, look, given that Musk is back in the game with Tesla, I think that maybe there could be room for Dogecoin later on. But first, he needs to sort out the house, and if he sees that, if everything is okay, then he can go back to, to the game of manipulating one crypto, which is Dogecoin. And yeah, it's going to be an interesting one to watch. So keep your eyes on this one. Polkadot, very quickly on Polkadot. Yes, we dropped below the 3.22 territory. I talked a lot about this one. And I had a special video here done on TradingView saying that, look, if we do drop and stay below the 3.22 territory right here, and we continue to trade below that, then yes, this is kind of opening the door to some lower levels. These levels we have not seen since 2020. Hey, look, it's very tempting to jump in, but I would suggest right now just to kind of keep in mind, let's say on the geopolitical side, what's going to happen there. And then we'll see how the US dollar reacts. Tron, now this one's another interesting one. Look at this, look how well we played out here. I talked about this. I said that if we do fall below the 50-day EMA, our next target is going to be the 100-day EMA tick. We came very close to testing that area, but look, I mean, to that level, but I keep on saying it's never the exact level, it's always the area around that level. And yeah, we tested good result near. Now, if you're looking for some lower levels, then yeah, you need to see a drop below this territory, below this 100-day EMA, below the 0.2570 zone. And then we can take it from there and aim for that 200-day EMA shown here as the white line, and then like I said, and then we'll go from there. But for now, if you're looking for some higher levels, then a push up of the 0.2786 right here is required. I know we could be missing out on a lot of territory, but you know what? I'd rather be safe than sorry. Ladies and gentlemen, that's it. That's a wrap. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Look, as I keep on saying, if this session is made for interaction, and you can always jump in with a question or anything like that, so feel free. If you're watching this as a recorded session, then you can always drop a message in the comments below. I'll pick up in the next session, but also don't forget about joining in on 26th of June. The link you can find in the description of this webinar. And then yeah, we'll go from there. We're going to talk markets. We're going to see which sectors are doing well or doing bad, or could do well, could do bad, and then we'll go from there. Ladies and gentlemen, thank you very much, and I'll see you later. Bye bye.